Okay, so I'll share the question to the group as well. Let's continue the question. Okay, guys, I'll give you 5 minutes time. From this particular paragraph, whatever that you can mark, can you guys start doing that one quickly? Okay, please read the first paragraph. Okay, whatever that you can mark, can you start marking faster? Either in the income statement or maybe the goodwill working, whatever that you can mark, guys, can you start marking it over there faster? I'll share the question now to the groups. So from this paragraph, guys, there are, in my opinion, three things that you have to mark. Okay, there are, guys, three things that you have to mark. Okay, can you guys please check and mark on that one properly? Hmm, 1 minute, Daniel. Yeah, that's correct. That's the answer for the deferred consideration. As in this question, we have to round off the answers to the nearest 1,000. Okay, all your answers, guys, you have to round off for the nearest 1,000. Okay, right. So, guys, you all mark the numbers from first paragraph. Okay, whatever that you can. There are three things that you have to mark. Can you guys mark and show me those three things? Yeah, exactly. Correct. Okay, right. So guys, done with that part. Can little bit check and see your answers. Right. First one, guys, they are telling on 1st of January, Gold acquired 90% of the 16 million $1 equity share by issuing 3 shares for every 5 shares. So this is what we call, guys, a share exchange. Now, normally the share exchange is there, no, guys. That is something that I need for my goodwill working. Okay, so let's check and see, guys, did you all do that part, guys, properly over here? So I'll write here the answer as what? Share exchange. Okay, right. Now guys, check and see, were you able to, what you can say, guys, work out the correct answer and take. Okay, now what they are telling, Gold has acquired 90% of, okay, 90% of 16 million shares, 16,000. Okay, by issuing 3 new shares for every 5 shares acquired. Okay, so 3 for every 5. So multiply by 3 and divide that one by 5. Okay, then guys, on the other hand, what you should understand is that now when you do this part, you get the number of shares. Now we don't want the number of shares, no, guys. What do we want? We want the value of shares. So the value of share will be, you have to multiply this answer by 8. Always remember, guys, who is doing the share exchange? The parent. So you have to, guys, always multiply it by the parent share value, which is going to be 8. This is the first thing, guys, that you have to do, right? Little bit check and see, guys, over there. Is your answer okay with that part? Right, 90% into 16,000 into 3 and divided by 5. Okay, what will be the answer then? Is it, guys, and that into 8? Is it, guys, 69,120? The answer for share exchange. It will be check and see, guys, is that answer correct? 69,120. Yes, no, guys, that's the answer, right? So guys, I'll mark it over here then. Share exchange answer 69,120. Okay, yes, that's correct, no? Right, okay, super. Right, now guys, in that paragraph they are also telling, additionally, Gold Corporation will pay a further consideration on 31st of December 2002. Guys, now see, when are we buying the company? January 2002. Now we are going to pay this in December 2002, which is, guys, after how many years? 1 year. So this is what we call, guys, what consideration? Deferred consideration, right? Let's start calculating that one, guys, over there. Right, deferred consideration. Okay, now guys, read the question carefully. What they are telling, Gold Corporation will pay 2.42 per share acquired. Now again, how much have we acquired? 90%. 90% of how many shares? 16,000. And guys, we are planning to pay for those people how much? Right, 2.42 per share acquired. Okay, 2.42. But guys, you have to understand, now when you multiply by 2.42, what do you get? Future value. Normally, guys, in share exchange, sorry, my bad, in deferred consideration, we should always mark what value? Present value. So therefore, multiply with the discounting factor. Discounting factor, guys, they have given. Guys, I have always said you, new syllabus papers, discounting factor, they will always give. So it's 10%, which is 0.9091. So multiply, guys, into 0.9091. This is your answer. Okay, can you guys quickly multiply and take this one, please? Okay, right, please multiply and take. Yeah, Devmini, that's the correct answer. Good. Okay, so guys, what's the answer? 31,680. Are we, guys, okay with that answer? It will be check and see. All good. 31,680. Okay, so I'll mark that one, guys, over here. Deferred consideration 31,680. Done. Right, now that is the second thing, guys, that you have to do. Okay, first find the share exchange, then find the deferred consideration. Now guys, you know how things work. Normally, once we find the present value, what is the second thing, guys, that we should do? We should start unwinding. Now guys, start unwinding that discount faster. Okay, please start unwinding. But guys, when you start unwinding, please be careful with the number of months. Okay, right, start unwinding, will you? Okay, right. Please unwind and check and see what is going to be the number of months. $16,000 into 90%, that into 2.42, that into 0.9091. 31,680. Yeah, that's okay. And guys, 31,000 now 680. You should do the unwinding part. Okay, guys, I'll show it over here. Right now, guys, normally how do we do the unwinding part? We always do it like this, right? Unwinding, right? Right. We first take what value, guys? Present value. What's the present value? 31,680 into how much percentage? 10%. But guys, you have to always be careful. We should do the unwinding according to the number of months of subsidiary. How many months subsidiary, guys, are we looking at over here? Only 9 months. So this into 9 divided by 12. Okay. Please check and see, guys, what will be the answer in that case. Into 10%, that into 9 divided by 12. So guys, I'm getting the answer as 2376. This should be the answer. Okay, 2376. Okay, guys, now can you tell me this answer normally in the income statement where we should go and mark this one? Very good. Next to finance expenses. Right now, guys, can you go and add this to finance expenses, please? Okay, go to finance expenses and add 2376. This is the maximum that you should do when it comes to the first paragraph. Three things: share exchange, deferred consideration, present value, and unwinding. More than that, I do not see any other adjustment that I have to mark. That's it. Okay, right. Guys, now can you go for the first adjustment now of the paper? Right now, go through that one, please. Right. On 1st of October, retained earnings were silver were 56 million. Now, guys, understand silver is whom? Silver is whom? The subsidiary. Now, guys, you have to be careful. Don't make a mistake. Subsidiaries retained earnings they have given for 1st of October. Right now, guys, what's the purpose of this sentence? Why they have given this sentence? To calculate what? Now, they have given the retained earnings in October. Why they have given the retained earnings in October? For what purpose, guys? Right? There has to be a reason why they are giving this answer, right? Exactly. Very good. For what working, guys, we need this answer? For working number 2, we need, guys, the answer for this particular working. Here, can you see? Working number 2, net assets of subsidiary at the acquisition date. Very good. For goodwill, yes. But be careful. Guys, look at this. This is the retained earnings for October. When are we buying this organization? On January. So I want you to now calculate and show me for January what's the retained earning, because I need that answer for working number 2. I don't want the retained earnings on October. I want to know what's the retained earning on January. Okay. Now, guys, can you start calculating for me retained earnings for January, please? Okay. Now start calculating retained earnings for January. Okay. Start calculating. I'll give you 2 minutes and then I'll explain. Okay. Right. Start, will you? Start calculating retained earnings for January. Yes. Now you add those two and you mark it for working number 2. Yeah, very good, Shaklu. That's the correct answer. So guys, they have given for October. You have to find for January. So check and see January to October, how many months are there, right? According to that, I want you to calculate and give me the answer. Yes, Rifki, that's the answer. Good. Mm, yeah, October, January, 3 months, that part is correct, but that value is the one little bit of an issue. Okay, others guys, now can you check and see whether did you all get the answer? Okay, guys, now look at this part. Now see, the retained earnings are 56,000. That's for January. Now the problem is there is no point of getting the January answer. We want to know what is the retained earnings on when October. Okay, right? We want to know, guys, when it comes to October, what's going to be the okay, sorry. Right, when it comes to January, guys, we want to know what's the retained earning. Now, guys, you have to think. Okay, now we have October now. Right, October, January, how many months are there? 3 months. So what you should do, you have to see for 3 months, how much did the retained earnings change by? For that, what you should do? You should take the subsidiaries profit after tax. Okay, little bit check and see, guys. I have taught you in this what lesson? Go to the SOFP lesson. In SOFP lesson, there is a topic called mid-year acquisitions. There I have taught you this part. But anyway, now guys, they have given the retained earning starting balance now. So what you should do? You should add what? Profit after tax into number of months. So whose profit after tax you have to take? Subsidiaries profit after tax, because we are doing the subsidiary calculation. So what you should do now, take 56,000 to this one, guys. Now you have to add how much? 9,920 into 3/12. Subsidiaries profit is there, no guys? That one you should now check and see 3/12. Why 3/12? Because 56 million is for October. October, November, December. 3 months I have to go front. Okay. Now guys, check and see once you do this part, what will be the answer in that case. So students have given me the answer as 58,840. This should be the retained earnings at the acquisition date. Okay. And also guys, I forgot to do a small thing. Guys, can you also mark and show for me what is the share capital of the subsidiary, guys? First, mark that also quickly. Okay. Can you please mark and show what is the share capital of our subsidiary as well? Yeah, read the first paragraph and guys, can you mark and show me share capital of subsidiary? Okay, please read the first paragraph and mark and show me the share capital of subsidiary. Okay, mark that one also. Right, read this paragraph and guys, mark and show me share capital of subsidiary. Correct, that's the answer. How much, guys? 58,480, no? Okay, 58,480. Yeah, I'll explain that one, Daniel. Okay, right. Right, share capital of subsidiary. Okay, guys, now when you read the first paragraph, now forget everything. Subsidiary has how many shares in their company? They have how many shares, guys? 16 million shares they have. You have to take the entire thing. Okay, now when it comes to share capital, it's not about what we bought and what we didn't buy. It's about how much they have. How many shares, guys, they have in total? 16 million shares. Is that clear? Right, guys, remember in accounting, share capital, you should always show it at what value? Nominal value. Now read that sentence and see, guys, what's the nominal value of a share? $1. So therefore, guys, 16,000 into 1, their share capital is 16,000 rupees. That's it. Okay, their share capital is 16,000 rupees. Correct. Okay, guys, now can you go for the second paragraph? I want you to mark and show me how many numbers. 3 numbers. Start marking that one, guys, over there. In your second paragraph, there are 3 numbers you have to mark and show. 3 numbers means goodwill and income statement, both. 3 values you have to mark and show. Right, start marking over there 3 values. Okay, Daniel, that part what you had asked me to explain, it's like this. Okay, now see, you want the retained earnings at acquisition date now. So first of all, you have to check and see what type of retained earning has been given to me. Can you tell me in the paper, subsidiaries retained earnings, what retained earning has been given to me? Is it the brought forward or is it the carried down? What type of retained earning have they given to me? Exactly. So when you have been given the retained earning brought forward, this is the equation what you have to use. Retained earning brought forward plus profit after tax into number of months. So retained earning brought forward is 56 million. That's for October. No? Now I should understand what's the answer for January. So what I have to do, take the profit after tax. Whose profit? Subsidiaries profit only I have to take. Right? Not parents profit, because we are trying to calculate subsidiaries retained earnings at the acquisition date. And multiply this one with 3 over 12. Why 3 over 12? Because we have to go forward 3 months. Because see, 56,000 is for October. No? We want to go for January. So October to January, 3 months. No, we have to travel front. That's why 3 over 12 has been taken. Which one? No, I think what you are doing is you're seeing 56,000 into 3 over 12. That's wrong. You have to see 9,920 into 3 over 12. Can't be. Okay. So, no. First, what you should do is 9,920 you have to see into 3 over 12. That you have to add to 56,000. I think you have added that and then see. Yeah, exactly. Bit mess. Okay, no? Yeah. Because the 56,000 you can't do 3 over 12, no? Because that's the entire retained earnings on January. Okay, so for that you can't do. Okay, right. Others, guys, now can you work on the second adjustment, guys, for me? See whether did you mark 3 things. Okay, start marking, guys, over there. See whether did you mark 3 numbers. What are 3 numbers? 2.6 million, 850, and also what's the other one? The depreciation. Make sure, guys, 3 numbers you have marked and show. Right. Yes. Rifki, little bit check on your depreciation answer. Little bit check on the depreciation answer. Yeah, I think that should be the depreciation answer, guys. Shasha, Daniel, both what you have sent, I think that should be the one. Yes, Asia answer is correct. Good. All okay, guys. Shall we discuss and see the question? Okay, guys. First one, 2.6 million is. No, Daniel, read the question carefully and see. They will tell where to go and mark. Okay, guys. First one, 2.6 million. What do we call that one, guys? That is going to be what adjustment? Fair value adjustment. Where we have to mark that one in working number 2, the net assets of subsidiary, right? First of all, guys, can you make sure you have written it here? Fair value adjustments. What is the name of this adjustment? Plant. Okay, mark that one, guys, over here. What's the answer? 2,600 fair value has gone up. Yes, Rifki, now the answer is correct. Okay, guys, after you do fair value adjustment, what you should do now? Fair value depreciation. Guys, when calculating depreciation, look at this carefully. 2.6 million divided by how many years? 3. But guys, this question is only for how many months? Only for 9 months. So you have to see into 9 over 12, where the answer will be how much, guys, over there? 650. That should be the answer, guys. Remember, depreciation, you have to always put the subsidiaries number of months, because you know why? This is whose plant? Subsidiaries plant. Therefore, you have to see subsidiary number of months. Okay. So the answer is 650. Where should you go and mark this one? Where does the paper say? You have to mark this to cost of sale. Now, guys, can you go and add this to cost of sale, please? The answer is plus 650. So now we have marked 2 things. 2.6 million and 650. 2 things done. Okay. Right. Okay, guys, now last one. Something new. We have never come across this in papers. Silver had a contingent liability of 850. This is also a fair value adjustment. Okay, now guys, can all of you all go to working number 2 faster? Okay, right, go to working number 2, fair value adjustment. Start writing here. Contingent liability. Okay, right, mark it, guys, over there. Contingent liability. Okay, guys, now think and let me know. Should I add this or subtract this? Think and let me know carefully. What should I do? I have to Subtract, because guys understand, when the asset value is increasing, we are adding to fair value adjustments now. Like that, when the liability value increases, from fair value adjustment we have to subtract. Mark this one, minus 850. Okay, an increase in liabilities will result in a reduction of net assets, right? Think of it this way: when assets are going up, net assets are going up, no? Likewise, when the liabilities are going up, the net assets will fall down, minus 850. Okay, guys, has this liability value changed? No, but I'm just telling you one small thing. Listen carefully. If the liability value has changed, that change you have to mark it inside the income statement and show. Is that clear? Where to mark it inside the income statement? Paper will tell. Now, guys, let's say the contingent liability is 850. Then at the end of the year, it became 900. Then that 50, the change, you have to mark it inside the income statement. Where to mark? They will tell. Now depreciation, they said no, cost of sale. Like that, they will tell where to go and mark if there is a change. But so far, there has not been changes in papers. Right. Okay. Now, guys, let's go for the next adjustment. Right. Okay. Can you guys read this one faster? It's important for the goodwill. Okay. Read this and see quickly. Third adjustment, right? Because I have to take it away. That's why. Okay. Read that one, guys, faster. Okay. So what are they telling? Right? NCI should be valued at what value? Fair value, by using what? The share price of silver. Okay, so by using the share price of silver, you have to value your NCI. Okay, guys, can you read the first paragraph, calculate and give me the value of the NCI faster? Fair value of NCI. Okay, please read the first paragraph and find and give me the fair value of NCI. Okay, start that one. Easy adjustment, should not take you that long. Good. No, I think Daniel, there is a small mistake, I believe. Yes, very good. Yeah, Sazvi, Basil, both the answers are correct. Right. Guys, how much you all are getting for NCI? Is it 5,600 by any chance? Okay, 5,600 should be the answer. Okay, right. Very good, Devmini. The answer is correct. Okay, guys, others who are not getting the answer, okay, little bit check and see now the working, how to get the fair value of NCI. Guys, look at this one right now. See, when calculating the fair value of NCI, this is how we have to do. Yes, Rifki, answer is correct. Guys, now see, how much percentage is the NCI? 10%. 10% of how many shares? 16,000 shares. Done. So that means NCI has 1,600 shares. One share is 3 point how much? 5. Because guys, we have to multiply using the silver share price. No, so silver share price is 3.5. That's it, guys, and then you should be able to get your answer. The answer has to be none other than 5,600. This has to be the answer. No, normally that one, Basil, we normally reduce depreciation from the reporting column. Now you have to understand, working number 2, what we do for goodwill is for what column? Acquisition column. Still we don't reduce the depreciation from the plant, because the reduction should be done in the reporting column. For goodwill we always take the acquisition column. No, so still we don't reduce it from the plant that way. We have to only reduce it from what column? The reporting column, and not the acquisition column. 69,120. And what is the other one over there? Yeah, because Daniel, understand, NCI has no part to play with the 3/5. Okay, NCI has only 10% of the company. No, so 10% into 16 million into value per share. The 3.5 is share exchange of parent. Right. Okay, then guys, now that part is also done. Okay, guys, now I'm giving for you adjustment number 4. Start doing it, guys, on your own. There are two things that you should work on. Adjustment number 4. What are the two things? Intra-group sale and purchase, URP. Start doing that one, guys, faster. Right, intra-group sales and purchases and URP. Okay, right, please work on that one. Number 4. Yeah, that answer is correct for intra-group sale. That's good. Supply is correct, but then you can little bit check the answer and see one more time. Yes, if key answer is correct, yeah. Now Daniel answer is correct. Okay, Krishma, to answer your question, when there is an increase from the reporting column, you have to subtract. Okay, from the reporting column, you have to subtract. Okay, guys, how about you all can little bit check and see, guys. First one, 600,000 per month sale. So what is the first thing, guys? What I have to do? 600,000 I have to multiply by 9 because it's per month. Okay, so first thing what you should do, 600 into 9. What is the answer? 5,400. What do we call this answer? Intra-group sales and purchase. What should we do? Step number 1. Can you all guys go to sales and remove this one? Remove from revenue, minus 5,400. Done. All good? Right. Guys, what is the next thing that you should do? Remove from sales and remove from where? Cost of sales. Very good. Remove from cost of sale also quickly, minus 5,400. Yeah, Rifki, that answer is correct. Okay, guys, always after we do the intra-group sale and purchase, what is the next thing, guys, that we should do? We should calculate URP. Okay, now normally, guys, how do we calculate URP? It is profit into inventory held. How much of inventories are held inside this warehouse? 1,200,000. And guys, remember the profit should be 25 over 125. This should be the profit, because guys, understand this is 25% on cost, no, but 1.2 million is what? Selling price. Okay, so therefore, guys, remember when you are doing selling price, you have to convert. Okay, that's why I have taken that answer as 25 over 125. Right, now guys, if a student didn't understand why I am taking 25 over 125, guys, okay guys, look at this part, will you? Right, now normally in accounting, right, profit is equal to selling price minus cost, no guys. Okay, selling price minus cost. Now what is the profit that these people are keeping? 25%. 25% on what? Cost. If it's cost means we call that as markup. So markup is always, cost is 100%. So if cost is 100, guys, selling price should always be more, no? So selling price has to be 125%. So selling price is 1.2 million. So 1.2 million is represented by 125. That's why 1.2 million divided by 125 into 25 to understand what's the profit. That's how I have gone there. So what's the answer, guys? 240. Good. So when it is 240, guys, what you should do, I have taught you in class, doesn't matter who sells to whom. What you should do in accounting to cost of sale, guys, what you should do, add or subtract. We have to always add, right? You have to add to cost of sale. Right now, guys, can you go and add to cost of sale over there? Plus 240. Yes, we have to remove the NCI share. Correct. Okay. And also, guys, little bit keep in mind who is selling to whom this time. Gold is selling to silver. That means who is selling to whom? Parent is selling to subsidiary. Keep that in mind. Parent is selling to subsidiary. Okay, guys, next one. Adjustment number 5. Can you guys please read that and see? Right, adjustment number 5. Exactly. We don't have to remove. Good. Okay, read that part, guys. Okay, what do they say over there? Gold's investment income is a dividend received from a 40% owned associate. Guys, listen. When you receive dividends from associate, what we have to do, you should remove that from the income statement. Now, guys, can all of you go to this investment income faster? Right. This investment income we got from whom? Associate. Remove this one completely. Minus 800. Remove that one. Right now, guys, if you are thinking why we are removing that, guys, listen, when it comes to associate, we are separately showing something called profit share of associate. That's why the dividend from associate is removed. Okay, now, guys, can you mark here faster below this one? Profit share of associate. Okay, now mark that one, guys, below the investment income, profit share of associate. So, guys, remember, dividends from subsidiary must remove. Dividends from associate must remove. Okay, why are we removing dividends from associate? Because for associate we are showing separately their share of profit. Guys, now can you take out your calculator, calculate and show me what is the share of profit from associate first? Right, start calculating for me the profit share of associate. Should not take you that long. Yeah, correct, that's the answer. Good. Okay, guys, what's the profit share of associate? 1,200. Easy now, guys. 3 million profit. We have owned them for several years. 40% we should get. So, guys, show the working if you want. Okay, 3 million. Okay, 3 million into 40%. Okay, then, guys, what should be the answer? 1,200. That has to be the answer. Right, show it, guys, over here. 1,200. Done. That's it. Yeah, we are yet to receive the balance 400. Correct. How did we get 800? 800 was given in the question paper. Yeah, investment income. And the paper says this investment income is what they have got from the associate. Okay, right. Okay, guys, last part. This has nothing to do with consolidation. Can you guys read this and tell me from what lesson this is coming from? Okay, the adjustment number 6 is nothing to do with consolidation, but can you check and let me know from where is this adjustment coming from? Which lesson? Very good. Okay, right, financial instruments. What is the name of this instrument, guys? What do we call this one, guys, over there? It's a convertible loan. We give a name called, guys, what account? What do we call it? What kind of instrument this is? Starts with a C. What kind of instrument, guys? This is called compound instrument. Okay, very good. So, guys, compound instrument, what is the type of accounting that we do? There's a name for it. Okay, what is the type of accounting? Yeah, online students, that's correct. What's the name for accounting, guys? We call it as split accounting. We should do split accounting for this. Okay, so, guys, remember, this is coming from the lesson. What lesson? Financial instruments. We call these as compound instruments. Compound instruments, guys, what we should do split accounting. All okay? Right now, guys, can you start doing this one? We'll do it together because we haven't done financial instruments in a long time. Guys, listen, next Thursday, Friday, Sunday, we are going to do a revision on the standards. How revision? Question based revision. Section B, I'll be revising. Through that, we'll be discussing the standards. Right now, guys, can you put a separate working for me, guys, faster? Okay, right, please put a separate working as convertible loan. Put something working number and guys mark it over there. Convertible loan. Okay, right, mark that one guys. Let's do it together. Convertible loan. Okay, right, below this one guys, can you write step number 1, right? Convertible loan, step number 1 guys, what we should do, right? Right, value of loan. Okay, right, step number 1 guys, what we should do, value of the loan. Okay, right. All okay, right? Now guys, how do we calculate the value of the loan? This is what guys you have to do. Okay, how to calculate the value of the loan? Very good. First one guys, what we should do, we should find the present value of, okay, present value of cash flow. When we say cash flow, it's about interest and capital. Okay, it's about interest and capital. Present value of cash loan, interest and capital. Okay, all good. Shall we start guys? Okay, now guys, can you read this question and tell me how many year loan are we looking at guys over here? Okay, right, how many year loan guys are we looking at guys over here? We are looking at a 5-year loan. So guys, first thing what you should understand, for year 1, 2, 3, 4, 5, for 5 years first we have to pay interest. Okay, so guys, can you mark it over there? Year 1 to 5. Okay, year 1 to 5. Right, we have to pay interest. Guys, can you read the paragraph and tell me how much of interest are you going to pay? Simple calculation. Okay, right, please go through the paragraph and guys tell me over there how much interest are we going to pay. Right, how much interest are we going to pay? Guys, are we going to pay 8% or are we going to pay 6%? We are going to pay 6%. Okay, we have promised 6% now guys, so in reality we are only going to pay 6%. Okay, can you guys calculate and show me 6%? What should be the answer? Right, how much is the loan guys over there? We have issued 100,000 loans. Okay, right, take the calculator and see them. Right, 100,000 loans. Okay, right, one loan is $100. Right, so that's 10 million. So we have promised to pay how much guys? We have promised to pay 6%. Okay, so 6% guys, what will be the answer in that case for 10 million? Right, answer will be 600,000. So therefore guys, then can you mark here, interest is 600,000. Done. Okay guys, now think and carefully and let me know this management accounting guys, because for first year to the 5th year the interest is same. Should I use discounting factor or annuity factor? What should I use? Discounting factor, annuity factor guys? We have to use the annuity factor guys. Remember, it's like this. There are 2 ways to do it. First thing you can do year 1, 2, 3, 4, 5. Separately for 5 years, you can multiply and take with discounting factor. But those who have done management accounting or financial management or whatever, you know that when the cash flows are equal to every year, rather than multiplying it 5 times, you can multiply with what factor? Annuity factor you can multiply. But don't rush. Guys, annuity factor, should I take 6% answer or the 8% answer? Which one guys we should take? 6% or 8%? What should we take? You have to take the 8% answer. Guys, remember, when you do the discounting factor, you should always discount at what value? Effective rate. Okay, now normally guys, in this lesson there will be 2 rates. One is the agreed rate, that is 6%, and also guys there will be an effective rate. Always remember, when you calculate present value, you should always calculate what rate? The effective rate. So therefore guys, when I take the discounting factor, I should take 8%. What factor? Annuity factor, because year 1 to 5 interest is same. Right, can you guys now mark it over there? 3.9333. Right, sorry, 3.993. Okay, Daniel, to answer your question, can little bit read the first paragraph and see when have we issued the loan? Right, this is nothing to do with subsidiary. Okay, when have we issued the loan? Exactly. So is it a 9-month loan or a 1-year loan? Exactly, it's a 1 year loan. That's why we did not take the number of months. Okay, guys, now calculate and show me, guys, what's the answer for the interest part, guys, over there. What's going to be the present value of interest? 2396. Is that answer correct, guys, over there? Yeah, 2396. So, guys, first thing what you should do, you should find the present value of interest. That is first thing. Right. And guys, remember, these are what loans? Convertible loans. So guys, please remember, if it's a convertible loan, in the final year, we might have to return the loan back. Now, convertible loan means what? At the last year, the person has an option. Either he will take the loan or he will convert that into shares. If he asks his money back in the 5th year, now guys, start marking with me, year 5, okay? In the 5th year, we have to return the loan. Guys, if you are returning the loan, how much worth of loan are you going to return for that person? We have to return how much of the loan, guys? We should return 10 million worth of loan. How 10 million? Guys, look at this. 100,000 loan. One loan is $100. 10 million I should return. Mark it, guys, over there. 10,000. Right, I should mark 10,000. Guys, now can you tell me, I should take now what factor? Should I take now the annuity factor or the discounting factor? Now we should take what factor? We should take the discounting factor. Why we should take discounting factor? Guys, this is the answer for how many years? It's only for 1 year. When it's for 1 year, you should always take discounting factor. You understand? If it's for many years, then only you should take the annuity factor. So understand, 10,000 is the cash flow for 5th year. So if it's for 5th year, you should only take discounting factor, which is 0.618. Right, mark it, guys, over there. Right. Yeah, I'm just remember, when we issue a loan, we only should pay the interest, no? Okay, we are issuing the loan means what? We give the document and we take the loan. So we are actually taking a loan over here. Okay, then guys, what will be the answer? 6,810. Guys, now can you add these two answers and let me know what's the final value for the loan? Okay, right. Now, can you add these two and let me know, guys, what's the value of the loan? Right. Yeah, so guys, we are getting how much? 9,260. Guys, start revising financial instruments. Financial instruments are one of the key standards for FR exam. Okay, so start revising. Right, so guys, what's the answer then? 9,206. Okay, 1 minute. 6,810 plus 2,396. Yeah, 9,206. Okay, done. Right. Guys, now listen, last part. This is the value of the loan. Is that clear? But remember, this is the value of the loan on 1st of October 2001. Are we doing the financial statements? Okay, yeah, correct. Guys, listen. Now, normally after we find the loan, we should also find what value? Equity value. But I am not finding the equity value because I am not doing the SOFP, you know. So therefore, I am not finding equity value. But normally when I was teaching in theory class, I used to do it like this. I used to take this answer and subtract from 10,000 from the loan. Then we will get what value? The equity share value, convertible share value we will get. But I am not going to do that. Right, now guys, listen, once you get the 9,206, that is the answer for when, that is the answer for 1st of January to, sorry, my bad, 1st of October 2001. But the financial statements are prepared when? September 2002. So 1 year has passed. Once you find the value of the loan, to do the calculation for the end of the year, we should do what table? Amortized cost table has to be done. Because end of the day, this is what? A loan, financial liability. Financial liabilities are always held at amortized cost. Right, now guys, below this, write down over here, amortized cost. Okay, now mark guys over there, next part, last part, huh? Amortized cost. Okay. Guys, normally how does the amortized cost table work? Brought forward plus interest minus cash is equal to carried down. Okay. Right, Amjad, to answer your question, you should take 9,206 and subtract from 10,000. Okay, the loan value minus your answer. So the loan is 10,000 minus from 9,206, then you will get the equity value answer. Right, brought forward plus interest minus cash is equal to carried down. Okay, done. Yeah, we have to put the equity shares inside SOFP. So since we are not doing the SOFP, I'm not going to do that part. Okay. You have to mark it inside equity as other components. Now, normally in equity, we have share capital. No? After share capital, we have something called other components of equity. No? There you have to mark that 794 and show. Guys, brought forward. Brought forward, what's the answer? 9,206. First mark that one. 9,206. Guys, don't make a mistake. Interest. Normally, we always charge what interest? Normal rate or effective rate? We should always charge the what rate? Effective rate. In this question, what's the effective rate? How much percentage? 8%. Now, guys, can you charge 8% on this answer and let me know what's the answer? 8% is the effective rate. Yes, on the brought forward, that means on 9,206, guys. Now I want you to charge the effective rate. Okay, right? What's the effective rate, guys? 736. Is that correct? Right, 736 is the answer. All good, guys. Right, minus cash, guys. What is cash? Actual interest paid. How much actually are we paying? 600. Mark there, guys. 600. This one 600. Can you see there? That's 600 only we are paying. Okay, now guys, can you get me the carried down quickly? I'm getting 9,342. Okay, so we are getting 9,342. All okay, guys? Right. Right. Guys, now listen carefully. Right. This 9,342 we normally mark inside non-current liability. That's not what I want. Right, now listen carefully. Guys, can you see this 736 is there? This 736 is the interest for the current year. We normally mark this inside finance expenses, but don't rush. Look at this question carefully. See what have they done. Right, now guys, look at this. Gold Corporation has recorded the loan at par value. What is the meaning of that one? They have taken the loan as 10,000 without taking it as 9,206 and charged 6% interest into finance cost. Now guys, for 10,000 loan, when you see 6%, what will be the answer? 600. So 600 they have charged to finance cost. That is wrong, no guys. Can you see here correctly what is the answer that has to go inside finance cost? 736. That means how much are we short now? 136. Very good, guys. 136. Can you please go and mark it inside finance expenses plus 136. Right, so guys, remember they have gone and put to finance expense 600. The correct answer is 736. So we are short, no? Go and add the difference inside 136. That's what we have to do. Right, are we guys all okay with why I added 136, guys? Online students, are you all okay with that part? Or you can do it like this: add 736, remove 600. End of the day, it's the same. So with that one, guys, now we are done with the question. Okay, now guys, let's start doing this one now. Right. Guys, now can all of you all go to goodwill faster? Right, we'll start with this one, guys, over here. All good now? Right, let's start with goodwill. Okay. Right, guys, can you take your calculator at the share exchange and the deferred exchange and let me know, guys, what's the investment or the consideration, please? Okay, right, add these two faster. The share exchange and the deferred exchange. Please add these two and let me know what's the investment value. 69,120 plus 58,840. Right. What is the total investment? Guys, can you first of all let me know these two answers on the screen? Is it the correct one? Because you know why, guys, I deleted and I wrote it again. Is it the correct answers, guys, what you all wrote? Same as what we wrote earlier. Is it correct? Share exchange and deferred consideration. Are these two answers okay? Now I think my deferred consideration answer is wrong, no? Yeah, I think it's 31,680. Yeah, 31,680. Yes. Yeah. So therefore, guys, now when we add these two, 69,120 plus 31,680, how much, guys? 100,800. Yeah. Okay, fair value of NCI, all okay. Guys, now working number 2. Can all of you guys now total this up and show it to me? What's the answer for working number 2? Okay, working number 2, net assets of subsidiary. Total it up, please. Right, how much, guys? 76,230 according to 2 students. Is that correct? 76,230 net assets of subsidiary. Correct now? Right. Now, guys, can you copy this to the next page? Next page means can you copy it over here? 76,230. Right. Mark it, guys, over there. Okay. Guys, now can you get me the goodwill answer faster? Right. Now complete and show me goodwill. Guys, remember one thing. I have seen so many past papers. If it's income statement, they are always asking students to calculate what? Goodwill. Right. So make sure, guys, you practice these two properly. Okay. Right, goodwill. What's the answer? 30,120. Are we guys okay with that? 30,120, the 170. I think 170, no? Right, 30,170. Because 230, no? Yeah, 30,170. So, guys, with this 6 marks finished, goodwill is done. All are guys okay with that? Right. Guys, now can you complete and give me the income statement faster? Okay. Start calculating, guys, for me now. Income statement quickly. Right. Please get me the answer for profit for the year. Right. Start doing that one. Please calculate profit for the year. Okay. Yes. Yeah. Amra, to answer your question, if there is an impairment, it's like this. Now, the first question what they are asking, goodwill at acquisition date. So normally when you calculate goodwill at acquisition date, you don't have to mark the impairment. But to answer your question, if there is an impairment, that impairment you have to charge it to where? Income statement. And when you're showing in the SOFP, you have to subtract that impairment and all you have to mark. But when you're calculating goodwill at acquisition date, that time no need to worry about the impairment. But when you're preparing the SOFP, we have to deduct it on the mark and also mark the impairment as an expense. All okay? Okay, right. Okay, guys, others can little bit check and see, guys, with the answers where things are okay with you. So from a student, I got the answer as 12,886. Is that answer correct, guys? 12,886. Okay, so seems like, guys, that answer is the correct one. Okay. 103,360 plus 60,800 into 9 divided by 12 minus 5,400. So, guys, I am getting revenue 143,560. If it's wrong, just let me know. Right, next one, 81,920 plus 41,600 into 9 divided by 12 plus 650 minus 5,400 plus 240. Guys, cost of sale 108, 610. Is that okay? Yeah. Distribution expenses 2560 plus 2980 into 9 divided by 12, 4795. Right. Administration expenses 6080 plus 3740 into 9 divided by 12. I am getting 8885. Investment income, answer is 0. Finance cost answer 672 plus 2376 plus 136. 3184. Right. Income tax expenses, guys, I am getting the answer 4480 plus 2560 into 9 divided by 12. 6400. Right. Guys, all are okay with 12,886. Little bit check and see, guys, the answer. Whether is it okay with you all? Right, guys, let's quickly finish off the last part, guys, and let's conclude. Okay, let's finish off the last part now. Okay. Guys, we need to now calculate profit attributable to NCI. So how to do that one? First thing, you go to your question paper. Okay, right. Guys, now in the question paper, when you calculate NCI profit, okay, when you calculate NCI profit, you have to first take subsidiaries profit after tax. All good? When you calculate NCI profit, NCI is the owner of whose company? Subsidiary company, no, guys. So you should first take subsidiaries profit after tax. Right, now, guys, start doing this with me. Okay, go to NCI profit working. Right, let's start. Okay, subsidiaries profit after tax, guys, what's the answer? 9,920, if I'm not wrong. Let me check one more time. Yeah, 9,920. Right, first mark this one, guys, over there. 9,920. But, guys, you have to be careful. Though we take 9,920, it has to be for how many months only? Into 9 over 12, because the 9 months subsidiary now, guys. Okay, so first show this one into 9 divided by 12. Okay, first get this answer into 9 divided by 12. Right, 9,920 into 9 divided by 12. What's the answer? 7,440. Okay, 7,440. Guys, can you tell me in this question, was there a fair value depreciation? Yes or no? Yes. What was the answer? I believe it was 650. Mark that one, guys. Minus 650. Okay. Guys, now don't make a mistake. In our paper, there was a URP, but who was seller in that case? Parent. Gold only sold. If gold is selling or the parent is selling, zero. There is no URP impact. Only when subsidiary is seller, you should take. Last one, did we have, guys, any impairment by any chance? No, zero. Now, guys, can you get me the adjusted profit faster? 7,440 into this. Right. So, guys, 7,440 minus 650, I am getting 6,790. Okay, right. Now, guys, when we get 6,790, we should put how much percentage for this one? 10%, because remember, we are finding NCI share. Okay, so 10%, guys, what will be the answer then? 679. That should be the answer. Okay, 679. Okay, guys, now last part. Can you take 679? Copy this one over here quickly. 679. Okay, right. Guys, this profit, mark it one more time. 12,886. Copy it one more time down here. This answer, copy it down. And now, guys, can you get me what's the parent share quickly? Please find the parent share. Okay. So, guys, what will be the parent share in that case? 12,207. No, yes, that has to be the answer. Done. Right, so guys, with that 2 big questions we finished today. 30 mark worth of questions we have completed. So guys, remember, next week we will be focusing completely on what? Accounting standards, right? Thursday, Friday and Sunday. Yeah, 1 minute, Basil. Okay. Amjad, wait, let me check your question. That's why now we are adding the URP to the cost of sale to adjust the inventory value. And then from the SOFP, that inventory value will again be removed. Okay, so they are like how you said, their inventory is more by 240 now. So when we are preparing the SOFP, from there we'll remove another 240 from current assets. Better to show the minus sign when you're doing the questions. Okay. Right, guys, y'all can make a move. That's it for today, guys. Two big questions we did know. That's enough. Again, guys, I'll meet you all then on Thursday for accounting standards. Huh? We'll be revising standards. Yeah, dollar sign Basil, just put on top and keep once. Okay. Right. Okay. Usually, Shanuri, this one they will upload it in the LMS. Do you have access to the LMS by any chance? Yeah, Daniel, you have to what you can say, since you have little bit forgotten, it's better you watch the recordings, but you can speed it up and watch, because remember, without the proper standard knowledge, it will be difficult to do questions, especially financial statements and section AB. So it's not a problem. You go through it one more time. But anyway, next week I'm trying to revise on everything. Everything means majority of the stands I'll be touching tomorrow, next week. So you will be getting a quick recap, but I would recommend you just to go through those recordings also one more time. Yeah. Yeah, they might ask small questions, Basil. There is no guarantee it might come. You have access for the October batch, no? Right. So, Shanuri, what I have requested is all the class recordings to be uploaded for October and December. So, Thursday and Friday recording will be available on your LMS. But those are not uploaded, right? Okay. Anyway, let me drop them a small message telling that anyway, I have requested for them to upload all the recordings. I'll just remind them before I go one more time. Right. All right, guys, welcome then. And also, guys, remember, please go through the standards. Now, next week target is standards. Okay, we'll be doing one ratio question each day plus accounting standards. That will be the target. Yeah, next class, guys, again on Thursday 2 to 6. Okay.